Hi, thanks for tuning in. This is a weekend review for the week ending December 9th, 2022. We're looking at a daily chart of the S&P 500. The ascending channel is broken. The uptrend is gone. Momentum is clearly negative and pointing down. Did not set a higher high. Closing below 393.48 on the daily is a tell. The band was pointing up. It's now not. You're really just looking at the weekly 10 to provide some form of demand. It is sloping up, just like you had back here. But the 20 was sloping down back here. Now the 20 is going sideways. So this is really the bull's chance to play defense. But at this point, you have a real clear downtrend on the weekly, and the momentum is flipped down. Now, I will say the EMI 5, SMA 10 bull cross is still in play. That is a bit of a lagging indicator, but it is. And the divergence that we have on the weekly here is still in play. ADX is at basically the zero line or trough, where you look for trends to die. They don't exist. So we're looking this week to see what the Fed's going to say and how it's going to impact this price. Really, the only demand that I see on this chart is down here between in the 370s. You might catch a bid here at 385, but again, unlikely. Keep moving the ball around the horn. And we'll talk about the structure here for a little bit on some of these other charts. Same setup here on IWM. IWM captured the 200 first and then reached the 50 first. Structure is very subjective, but what I will say is this is potentially a flat, but it's also a lower high, and lower highs and lower lows are changes in trend. Now, you do have a reset to the zero line on IWM. That is what you're looking for. But really anything below this gap fill is a big problem, because it starts to open up much, much, much lower prices. And at this point, if you look at the weekly, she's already done everything she needed to do and captured the 200 for 5-6 weeks, gave it right back. Not the look you want. And I can't help but see this pattern. Coming into play. And this is a descending triangle. And if they don't hold this 178 level, this thing is going to go all the way back to 162. There's no other way around it. And if you look at the monthly, this has already done mean reversion, right? We're already at the middle of the channel, and PPO has reset to the zero line. So from here, it looks like they're digesting all demand. I will say the histogram is curling up. That is a positive. But until she can get above essentially 200 and the 20, this thing is toast. Now you got the 50 sloping up, but you had that back here and you didn't catch a bid. So it's the same story all over again. This time might be different, but probably not. And until they can get outside this descending channel, there's no reason to look at IWM. QQQ, same descending channel. You do have a bit of a broadening pattern here, a lot more noticeable of a corrective pattern than the other charts. You do have the bands pinching, so they are winding up for a move. Weekly did stay above the 200, so again, QQQ outperform IWM. IWM is not allowed to outperform QQQ ever unless it's in a downtrend. It's the only time it's allowed. There was one period in end of 2020 where IWM was allowed to outperform QQQ, but it was just a trap, right? Despite PEs being way more favorable for IWM. I think the PE, the forward PE is 11 on IWM, and it's something like 19 or 18 on SPY, and way higher on the Qs. Not allowed to buy IWM. Just not allowed. So you look at QQQ, same story. Expanded flat, really can't go below 278. That's the line in the sand. Expanded flat, looking for price to break 212.76. And ultimately, SMH continues to look like the best sector to own. Always is, always has been. Broke this descending channel and now kind of putting in a bull flag pattern here. The 10's rising above the 20. I mean, this is everything you want to see. So SMH is the strongest. I mean, even if you compare it to SPY, right? Can't get above her macro downtrend. So that's why SMH is stronger. Take a look at XLF. So XLF still above the macro downtrend, but very possible that you have something like this going on. That broadening pattern. As you can see, these lower highs and lower lows and higher highs. And this pattern could bring price all the way down here to 28, or this volume shelf at 27. And again, this gap down here, it doesn't have to get filled, but it certainly could. Again, the line in the sand here, very clear, 33.76, the confluence of this downtrend. And any dips into 33.76, 34 bucks are a strong buy this week. And as you can see here, more reasons why. You'd think that XLF leading would be good for IWM. IWM hasn't done anything. Again, it's the stepchild. She's not allowed to do anything. This is a beautiful diamond top, from what I can tell. Existing uptrend. Breakout from the triangle. You've got a broadening pattern, and then a contracting pattern, and now a breakout on volume. And PPO hit the zero line and is accelerating lower. ADX is confirming trend mode. So this is a sell all rallies at EMA 5 and SMA 10. And the target, symmetrically speaking, is to get back down to this blue box. So XLE is a stone cold sell until it could be breaking this uptrend that it's been in for 2 years. Commodities broke the uptrend, and now momentum is accelerating. So resets to zero line, that's where the bulls try to take the ball back. And if they fail, what you end up doing is trapping everyone that tried, and really what looks like a big bear flag. Right? And what you would look for is something like that. And again, breaking down from this ascending channel that she's been in for 2 years is actually really good for stocks. It's really good for bonds. It's not good for commodities. It's not good for the inflation story. It's not good for CPI and PPI. And when all those things top, that's when the stock market tends to bottom. That's when bonds tend to bottom. And that's what we're looking at. And again, I think, this thing, DBC, XLE, these things that have led for the last 2 years, they're not leading anymore. They're actually in distribution patterns. And breaking this uptrend is part of that distribution. Let's keep moving along. IYT is another one. She topped first back here in May, set a lower high, and has continued to put in lower highs ever since. So, people want to talk about bear markets and the average length is 1.5 years. Well, here's 1 year and 5 months. Still in a bear market. And how low can she go? I mean, realistically, 178. Anything below that is a big problem. I mean, you don't really want to see her give up. And if you zoom out to the monthly, you don't really want to see her give up this level here. Right? Because this was resistance. and now it's acting as support, and they come back and test it again. That's totally fine. But what can't happen is giving that up. And so what setup here I have is, in this we can just review why I like this setup so much. Is you came into the gap fill, you got the gravestone doji, and that was the first. That's what started the distribution or corrected pattern. Came back down into demand, which was this gap down, right back up into that supply, had a higher high, and now still trying to hold this pattern. As long as she's above this 216, 218 zone, it's fine. This is what the market does. It's frustrating everyone. But what I will say is you would expect a bounce from this trend line. And if you take the trend line out of it and just really call it a channel, right? This break above is almost always a sell. They don't work. Breakouts of channels don't work. Breakdown, that works. Breakout, that doesn't work. What you had here is you break out of this channel, come back in, test the top. Now we're back at the bottom. And this is where you would be looking to take a bid. Take demand. This gap fill at 216. And we're looking for a daily reversal sign at the confluence of demand, which is this gap fill, long-term trend, and weekly moving averages, right? The 200, the 10, to tell us that the bulls have the ball. Same positive divergence here on the weekly. Okay, so what the bulls really, really need is for this to break out of this down channel, this downtrend. And if they can't do that, then they have no chance anywhere else. This marked the top, she'll mark the bottom. So as I called out in last week's video, we were looking for a top in bonds, right? A rally into this downtrend is exactly where you would look to find sellers, especially given ADX is not trending. See, like right here, ADX was trending this whole time down. Okay? That whole time, ADX was saying this is a trend. So you don't want to be fighting that trend. And what that means is any rallies in that trend are counter trend rallies. And you can see the trend here by the slope of the 50, the slope of the 20, right? The longer term trend is down. The short term trend is up. The 510 bull cross is telling us that there's a short term trend that is up. All right. That being said, we have a weekly reversal candle and a pullback really testing this downtrend on the daily. And we hit all the levels I had for this particular move. It's possible they come up one more time, and then that's where we start the 50% correction. So if this is a real move, if this really is the low, what you're going to get is a rally up like we did, a pullback to about 100, and then a rally from there. Right now, you just don't have that. It's just the beginning where it's a counter trend rally. You need sideways, you need time to go sideways before that can actually happen. Taking a look at GLD, and then we'll look at some individual stocks. So GLD rallied back all the way to 168. If you go back to October, you'll see my video marked has the dollar topped. And if you look at intermarket correlations, what you would expect when the dollar tops is that you would expect commodities, especially gold and silver, to have bottomed. Now, commodities are more TNX interest rate related, and the dollar is more gold silver related. Just from what I'm telling you right now, what I see in the markets. So a rally back to the 50 is great. We don't have an uptrend yet, right? This is still very, very fresh. I do love the cup and handle look. I do love how PPO got to 0 and curled up on the monthly and is now trying to recapture the 20 and the 10. And if she can get above the 20 and the 10 and can stay up here, this thing's ready to go. But you don't buy cup and handle patterns until they break out, until they're above 186. So this could have a lot more time and frustration. And if you zoom into the daily, you'll see that she's just at the 200 and has hit it twice now and found sellers both times, and has now put in a bearish divergence on higher highs in price, lower high in momentum. You would expect this to pull back somewhere into this zone. So what does that mean for interest rates? Still in a downtrend. What does that mean for the dollar? Let's take a look at the dollar real quick. So this was the bearish Harami pattern that I talked about. A close below this low is extremely bearish, below this uptrend, and this trend wasn't sustainable. We all knew that. I called that out for a while. DeMark, a rally into this trend line that had a slope of that rally of basically 70%, had no chance. TD 913.9, sell setup, and now you've started the DeMark buy setup. And what you're looking for is really week 9 and then a rally back to the 20. That's it. That's all I got. So we got one more down week in the dollar, which would be good for gold and silver. And then from there, you're looking for a rally back. And this thing was extremely overbought and is now coiling down here at the 200. So if this uptrend is going to break, if you look at the quarterly, you've now got below last quarter's low. So this uptrend that you had, where you had higher lows every single quarter for basically 2 years, has broken. So this is why gold and silver might be very attractive for the next couple years. You need a dollar that is topped for that to be true. If you look at the monthly, though, the 20 still sloping up, the 10 sloping up, the 50 sloping up. This is still an uptrend, and this thing can pull back quite a bit. But if you look at the higher low that it had set back here, right, broke this low, rallied up, it's already broke that low. So you got to be very careful when these parabolic moves go up, they parabolic down. The same thing with TNX on the monthly. Put in the 9.9 sell. Look at this. This is still an uptrend. Now you're looking for prices to pull back, and they have. And as I called out last video, they were pulling back to the 20. That's where TNX is. And TNX now has broken the previous candle's low and closed inside. And so that's what you were looking for. Now from here, you can come up and set a lower high and then continue lower, or she can keep going lower to the 50 or to the bottom of the Bollinger Bands. There's a gap here at 30.35, and I think that's all you're going to get before sideways action. I think it's entirely possible that this thing just remains in a range between 25 and 44 for the remainder of 2022 and 2023. And what that means for bonds is they're likely not going much higher until you break the range. And I wanted to bring up QQQ again from a DeMark standpoint. I can't view those indicators in TrendSpider, so I view them in Thinkorswim. DeMark had a 913.9 buy setup on the weekly, 3 closes below the 200 just to recapture. So we call that a bear trap. On the monthly, has a TD9 buy setup into a rising 50, something that rarely ever happens, and a 61% retrace of this entire move. And if you look at the long-term channel, just connecting the highs and the lows, she hit the low here. So this thing's as close to risk as she's ever been. You're going to find out if this really is a bear market soon enough, or if this is just mean reversion in an uptrend. And right now, it's mean reversion in an uptrend. The short-term trend on the monthly is down, but what I want to talk about is PPO and MACD were at 50. Now they're at 0. And that's mean. You want these to get back towards 0 and then curl up. So the mean reversion bit has played out. What I'm looking for now is sideways action. Sideways between 258 and 315. All right, let's take a look at SMH as well real quick, just so you can see the DeMark count that was up over here. On the weekly, had the TD9. On the monthly, had the TD9, and has now done a price flip. And if you notice here, on the monthly, the 9-9 sell setup with the bearish Harami was the clue. So, these setups are extremely rare. And if you want to talk about, is this a new bear market or are we still in an existing secular bull, the trend is up. It's clearly up on any long-term chart you look at. And anyone who tells you otherwise is just clouded by their bias because all they're looking at are hourly and daily charts. But if you look at the monthly, the quarterly, these things are strong uptrends. All it did was pull into the 20 on the quarter. That's all you have for SMH. Pulled into the 20. And you're going to say this is a downtrend? This is not a downtrend. This is an uptrend. And what is possible is you have a 9-13, 9-9 or sell setup, and you have started the buy setup. So this could go a lot longer, but the point is you don't guess, just follow what's happening. Time gave you, with price, a chance to get long on something that really never pulls back to these levels. Almost never. Whether you want to connect it there, whether you want to connect it there, it's the same thing as the Q setup. And so these two are extremely high probability buy setups. All right, let's go back and look at some individual names and we'll wrap up this video with some ratios. ENPH I still like a lot, but this has a potential failed breakout, right? PPO now pointing down. Got to keep an eye on this one. But this trend looks great. The bands are pinching. And it's possible that it will break out and ultimately come and hit this target that we've had here around this top trend line. But for now, the 20 is your stop. And if you don't like that, use this trend line down here. But this is still a big bull flag. NVIDIA has been a leader within SMH, coming off the lows, up 65%. Okay, I was building a position down here. I am now starting to sell some of that position up here. You have the bearish divergence. So 3 highs in price, 3 lower highs in momentum. Ideally, you'd get a gap fill up here. Ideally, you'd get this neckline to start to come in somewhere around here. Give you the left shoulder, the head, pull back for that right shoulder around 140 and this gap fill down here. And that ultimately will be the next buy. Right now, I'm looking to trim this position. And if you look at the weekly, looks beautiful. Right, the 510 bull cross. Now really the only problem is this overhead supply up here, which is where I'm expecting price to rally into with any strength in the general markets, and then pull back from there all the way back down to 130s, putting in that right shoulder look. So that's one setup for the week. Netflix I've liked for some time. I don't see Netflix getting above 352. That's the gap fill. And really the gap is pretty much filled. But this has outperformed most names. And it's one to continue to watch for outperformance. That's generally how that works. Still in this channel, this is a buy. This is an ascending channel. These you buy. And where do you buy? At the middle or at the bottom? Where do you sell? At the top. And really, there's a low probability that the bulls get through here. Costco, I love this symmetrical triangle. Just had earnings, so earnings are now done. Really just looking for a pullback a little bit further into 467, and then this is ready to either rally back to here or break down. So if you're looking for bull entries around 466 to 455, that's fine. Your stop is 449. So just a real quick risk reward. Risk 5% to gain 12. And the potential move is something like this. Really one more all-time high. So I like Costco a lot. Again, no real trend, but we're getting close to demand, which is where we like to take trades. So this is on my list for this week. We'll go back to Crocs, one of my favorites. I love this bottoming pattern that you've seen here now play out for quite some time. A throwback within 30 days of the breakout is perfectly normal. Where you want to draw that breakout from, in my opinion, is 85. So any pullbacks into 85 this week are for buying. That may not happen. It's entirely possible. This is just a bull flag. And this thing continues once she hits maybe $90, the bottom of the bands, something like that. PPO is resetting to 0. You want to see PPO come a little bit lower and then flip up. ADX is saying that this is not a downtrend. ADX is saying this is a correction. And I would agree. And if you look at what type of correction, it looks like an expanded flat where you break the high. So I'm looking for price to come down and break this low of 91.29. And finally, we're going to wrap up with the China stocks. BABA has been the leader within KWEB. KWEB is now finally above this macro downtrend, above the 200, and above all moving averages on the daily. Any pullback into this 27-28 level is where you look to buy. But this is a doji. This is a reversal sign on the weekly, and not exactly what the bulls want to see. And if you draw out this same type of pattern you see all over the place, it's entirely possible this is a broadening pattern as well. Either way, the POC, the point of control, is saying that this could turn into demand. This 29-28 level that I was talking about before, they captured, they didn't fall short. They are above the declining 50 on the weekly, and the 200 is at $50. And so the level that they need to capture is 34. So they're approaching a sell level, and really where you would find any type of demand, as I pointed out earlier, would be down here in this pocket, right, between the 50 and the 200. And so what I'm saying is this is still an ascending channel. It's likely that she could keep rallying up to 34, 35 before the pullback. And it's that pullback that I'm looking to buy. Let's take a look at quarter-to-date performance. NVIDIA, Crocs, Netflix are leading. KWEB as well. And silver at the top of the list. EMPH, SMH, etc. If you look at the bond to SPY ratio, this is still a strong downtrend, and all that's happened is it's rallied into the declining 200. And if you look at the gold to SPY ratio, there's really nothing that's happened yet. MACD's at 0. Price is really coiling inside range bound, so we don't have any clear indicator whether or not it's time to favor gold over SPY. So I hope you liked the video. If you do, hit the like button, subscribe to the channel, and we'll see you next week.